What's going on, everyone? Anthony Drew Gary here, host of the How To Show, where we talk about optimizing life, money, and happiness one how-to at a time. I am really excited to get this episode going because it's going to be more than just me talking to you this week. Unfortunately, I don't know everything. And what that means is that I have to bring on some guests from time to time who can start to fill in the gaps. And it really benefits everybody, including me. I get to have these conversations with folks, and I get to interview them in such a way that hopefully it provides a little bit of value to you. And I know it does for me as well, and so everybody wins here. Over the last year and a half or so, I've done a decent amount of episodes talking about different things you can do with your money. And so far, everything that I've talked to has been in a how-to sort of scenario where you do things by yourself. And the reality is that not everyone wants to do this sort of stuff by themselves. They want somebody in their corner. And the good news for us is that there are people who fill that sort of a role. There are people in the financial planning space who can help you with your financial goals, with your retirement, different things like that. And I have the privilege of bringing a financial planner onto the show this week. So we're going to talk with Jared Defore. Jared's a financial planner. He works here locally in Indianapolis. And I don't want to tell you who Jared is. I'll let Jared do that. And so without further ado, let's get started this week. And we're going to talk about how to choose a financial planner. All right. Jared Defore, welcome to the How To Show. I appreciate you joining me.
All right. I'm excited.
Fantastic, my man. So I jumped on LinkedIn, and LinkedIn says you are a financial planner. I need some entry level, talk to me like I'm an idiot sort of understanding for my benefit. What's a financial planner and what exactly do you do?
It's a good question because financial planner can be a very confusing term, even though it sounds like financial planner. When you get down into it, it could be very confusing to the general public. So what I do, I meet with individuals who want a financial plan. Actually, oftentimes they don't want a financial plan. Really, no one lays in bed at night thinking, I need a financial plan. Really, there's some kind of headache or some kind of pain point that gets someone interested in the work that a financial planner does. And most of the time it's surrounded by investments. But as a financial planner and a certified financial planner, really, it's more of the full money spectrum for an individual. So they might come to us initially for kind of a pain point dealing maybe with their investments or retirement accounts, that sort of thing. But anytime someone asks me what we do, I say we're a financial planning firm that does investments. So the thing that I do is build a financial plan. So that's something that they don't necessarily come for. Some people do, because some people get into the weeds and find out really what we do. But a lot of times it's a lot of education up front. And then that's my job, is to understand what the client wants and then analyze it from different avenues, from a tax perspective, an insurance perspective, retirement planning perspective, their current cash flow, like the whole gamut. So it's really a lot more than just, hey, you should buy this investment product or you should invest your money this way.
All right. So maybe we can clear up a little bit of a misconception. Does everyone need a financial planner? If you're just really young, do you want to use somebody's help? If you're really old, do you want to use somebody's help? I want to make sure that there's not this misunderstanding that what you do and what you provide is for a certain segment of the world. I think that that would be best described by you rather than me speculating. So what do you think about that?
Yeah, the same with a lot of other industries. There's different service levels, if you will. I like to think of it as the kind of the restaurant industry. Think of fast food. You kind of know what you're going to get. It's a little bit lower cost. Quality is kind of midpoint, but you know what you're going to get. The way kind of financial planning is a little bit more structured is almost like that hole in the wall type of place where you're not going to find it any other place. Like you can probably find something similar, and so another financial planning firm might be doing something similar, but it's going to be its own unique setup. So does everybody need a financial plan? Maybe to a certain extent. More importantly, everybody needs to know about financial literacy as a starting point. How deep you go depends on what you're wanting to get out of a service. So the service that I kind of provide, and a lot of other CFPs, is more of this full gamut. So some people may not want all of that, the service that we provide. Because it's a little bit more full gamut, it does tend to cost a little bit more. Now, as just this industry is growing, because it's still 40 years old, if just around 40 years old. As it grows, there's going to be different. Basically, as anything grows, the cost goes down. So you're going to get to the point where cost is a little bit lower on kind of hiring a CFP. And right now they're out there, and they're kind of more of the one person shop type firms. Now, kind of circling, that's just kind of like the different levels of it. But circling back to, does everybody need it? I'll be a little biased and say I think you should look into it to see if you need it.
That's a fantastic way to put it.
If you haven't thought about it, you need to at least think about it and do a little bit of education on yourself of, okay, this is what's out there. So it kind of starts with financial literacy. Get your basics. And I know, you and I are both part of the, different investing and finance communities and personal finance communities and whatnot. So getting that general understanding, then exploring, do I need it? And then, who provides what I need? So unfortunately, there's a lot of work on your end instead of just walking into a shop and that being the right fit from the get-go.
Yeah, I think that makes a lot of sense. And from the standpoint that maybe not everybody wants to deal with their entire financial life by themselves, it's good to know that there are people like you that they can reach out to. And so when I start to think about who needs a financial planner, realistically, it's anybody who wants to have someone in their corner, it sounds like.
Yeah. And oftentimes, so here's, I mentioned a little bit ago about pain points. Mm-hmm. Right now, a heavy amount of the people that go to a financial planner are typically people who are about to retire because they've worked all these years and they've saved up a bunch of money, oftentimes to a 401k that had just a few options, and it was just you pick one and you go with it, and it was kind of an easy concept. And all of a sudden, once you retire, it's like, oh, do I keep it there? Do I have someone else manage it? This is a lot of money. Do I do it myself? If I do it myself, do I have the ability to do it myself? Do I trust myself? Those sort of things. So those are the people who kind of have it, who have financial planning on their mind from the get-go. Then there's other events as far as people coming into money, like that's an event. But really, you're starting to see really a little bit more with our generation that's kind of exploring the idea of getting a financial planner earlier in life. Mm-hmm. So this is helping them tackling debt, particularly college debt. I've helped clients recently kind of analyze how much of a house they can afford. They were in their starter home and their family was expanding, and what can we afford, that sort of thing, and how does it tie into my savings plan because we still have another 30 years to save? Can we do it? Those type of questions to get someone to bounce those ideas and questions off of, mm-hmm. but look at it from all different angles, just outside of, oh, here's a math equation, this is what it says. Like we're really looking at it from a lot of different angles to make sure it's the sound advice.
Yeah, I think that's powerful in the sense that I think what you accurately described in the beginning there is a situation that much of America as we know it probably is in, is that they've been saving for retirement for a decent amount of time, and then if the time comes where they want to retire, and there's a big question mark around it as to whether or not we've put ourselves in a position where we can do that, and that's where it sounds like somebody like you comes in, and that can be really beneficial. But it also sounds like somebody like you can help someone set up a plan that may have a higher level of confidence in being successful, and you can get that started earlier on. Talk to me if I'm out of line there or not.
No, that's exactly what it is. Think of it this way. You have the older generation that kind of grew up to parents that lived during the Great Depression, and those their basically tendencies are going to be more towards how their parents handled money.
Mm-hmm.
And what you see is a lot of that generation didn't talk about money, and they hoarded a bunch of money. They had a lot of money. And the thing is they often had a lot of money when they were later in life, towards the end of their life. And I mean, their kids may benefit from the inheritance, if you will. So you kind of have that type of individual who's always held money tightly, but didn't necessarily know how to spend it. And then there's another side of the equation of people who spend way more than what they need. My goal is to try to balance the two, because right now it's kind of a barbell, and I try to get people in the middle so they enjoy what they have throughout their life instead of always hoarding it, to get to a point where they're later in life and they look back and say, okay, what could I have done that now I can't, but I have all this money. So I kind of look at it, I mean, from that standpoint. And then on the flip side, people who are maybe overspenders, I try to help them to see what the future looks like based on their current habits.
I think that's really powerful in the sense that you can help people, guide them, and navigate them in that world. And I think maybe the more important step to that, to preface it, is that you are qualified to give this sort of advice. This isn't somebody asking their friends or some chat room or any sort of any place where you can get unsolicited advice. Maybe this is somebody who has a professional background, who has the understanding and the training to give advice that is suggestive that they could potentially improve their lifestyle if followed.
Yep. That's it, to basically the T. And what I try to do, I mean, it's as much as a kind of like a coaching type of role, behavioral coaching type of role, than it is as like crunching the numbers, because you can't just crunch the numbers and give advice without understanding kind of who that individual is and what's important to them. So you can't have everything, but if I get to know the client and understand what's valuable to them and what's not, I can kind of help sort that out and kind of do the math to it. But then also just, I mean, there's certain talking heads out there that basically say, no, you can't do this. No, 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 no. And as an individual, when you hear no, 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 you're just going to turn off what you're hearing from that person giving the advice, because it's like, well, you're just kind of fitting everything into a container, and not everybody fits into a container. So I guess it's more of a role of like trying to tailor advice to the individual based off of what they want and what's important to them. And that's where asking the right questions come into play.
Yeah, and I think that you've got great intuition that everybody's motivated by something, and not everyone's motivated by the same thing. And so that's powerful, and something that someone might look for in a financial planner or a financial coach, is the ability to have that sort of intuition. While people are thinking about this, and if there's anybody in the audience watching that thinks that maybe talking or having a discussion with a financial planner sounds like a good idea, how might you go about picking one? I can't imagine that, just jumping on Google and typing in financial planner Indianapolis is the best way to do it, but I bet you it might be the way somebody tries to do it. So what might be the best way to vet out who you would want to work with, and what's that look like?
Yeah. And to be honest with you, that's a good start. I wrote down some things before this, and that's actually a good start. But the thing is you mentioned something very good there, vet. So yeah, you could do that and get a list of who's close to you, but then how do you vet those individuals? And that's assuming, you just want to work with someone local, because this is a very trusted relationship. And oftentimes people want to be in person, but with the pandemic, I mean, we've gotten way more used to talking over, a Zoom type of meeting just like this, where the industry was going that direction. They're trying to push it. They're trying to force it on advisors. But a lot of advisors, I forget the percentage, are 60 and older. So it was going to be a hard move to get everybody to change. But the pandemic accelerated everybody's use of technology by 10 or 5 or 10 years.
Sure.
So that's a good start. But the vetting process, that's important. And I'll share with you some other ways to search outside of just what's near me. But I'm a huge advocate, and it's based on my credentials as well, of kind of being a fee-only financial planner. Basically, financial planners, oftentimes you might hear financial advisors, there's different ways that they can be paid. So the general public's like, why? It's not even really a question until you start digging in and understanding. But there's a couple different ways to be paid by a financial planner and or financial advisor, and that would be fee only, which I mentioned. That's how that's what I advocate. But another way is commission. So these are individuals who sell a product or sell an investment, and every time they do that, that's how they get paid. And then there's kind of a hybrid model of the two. A lot of the, we'll call it bigger box names, are on the commission model. And I rewind back 10 plus years ago when I was in school. I studied finance and I studied accounting, and then as part of my accounting degree and wanting to be a CPA, I wanted to get to meet the 150 credit hour requirement. I started studying finance, and I really got interested in becoming a financial planner. At 10 plus years ago, that term was even more, it was less known than it is now. And I was kind of looking at different jobs in that space, and I was just kind of immediately just went to the big box names, the ones you see on the commercials. And when I found out, when you start looking at the job description, it's more of a sales role, and I kind of instantly got turned off by that. So not saying that that's bad, but the fee only model, it kind of made more sense to me. And then as I explored the CFP credentials, ultimately a CFP has a fiduciary duty, and that's a funny word to say. And it seems like CFPs love to throw it around, but really the general public's like fiduciary. Then they get on Google, what's fiduciary mean? What's really the advice that I give or we give has to be in the best interest of the client, similar to like a doctor, attorney, a lawyer, that sort of thing.
Yeah, let's unpack that a little more. So this sort of fiduciary relationship, I'm familiar with it in the terms of real estate agents, real estate folks who have that fiduciary relationship with their clients to do what is in their best interests. And talk to me a little bit more about that from a generalized perspective. Are all financial folks fiduciaries?
Not all financial folks are fiduciaries. So
Okay.
there's kind of two models. There's the people who work at a brokerage firm and they're selling a product. They are not held by the financial or fiduciary rule. They basically are supposed to sell products that are suitable for you. but they may not be in your best interest, but they kind of meet quasi what you told them. Where the fiduciary rule, you have to look at the angles of based on what the client wanted. And if there's any conflicts of interest, you're kind of stating them up front, like, hey, this is a conflict of interest. I think it's the best for you, but I present this example. And just an example right now, like a typical conflict of interest may be if I'm investing your assets and you asked me about taking some of your assets to pay off your mortgage, I have to look at it from, okay, what's best for Anthony in this situation? It could be to take the money and pay off your mortgage, or it could not, or it could be, no, hey, interest rates are low, don't do that. But I have to explain it to you in both ways, the pros and cons, and also say that, hey, if you were not to pay it off, hey, by you not doing that, your assets are staying with me and I'm collecting more of a fee for that. Now that's kind of like one of the more common conflicts of interest that I have in my role. But another example just might be if on the other side where it's not a fiduciary, it's someone who just doing the suitability rule. You could get pushed to a product, but that product could have a sister, if you will, very similar, but the cost of product A is more than product B, but you're getting pushed product A. It's unclear on why they're doing product A over B, and oftentimes comes back to maybe how much they're getting paid.
Yeah, it sounds like there could be some ambiguity between suitable and in your best interest.
So the kind of the thing that goes around in our community is it's kind of like if you're going to get fitted for a suit, you could try on the suit, it fits everything, fits all the specs, but it looks terrible on you. It's a polka dotted suit. But the salesman's like, hey man, you fit this to the T. Where as a fiduciary, you'd have to come in and say, okay, it has to fit and look good at the same time.
That's a fantastic analogy to start to paint that picture. And we've touched a little bit on it so far as to how a financial planner is paid. And it sounds like there's a commission model. It sounds like there's a fee model. Can we talk a little bit more about the fee model? I think that everybody has a good idea of what the commission looks like. Yeah. It's based on a transaction, but what's the fee model really look like? Because
so there's a couple fee models that are out there. One is a AUM, which is assets under management. So if you had let's just say $1 million that I was investing for you, I collect a certain percentage. Now, every firm kind of has a different calculation of what percentage that is. It's usually a tiered approach. Oftentimes, it's right around 1%. And then as assets go up, the percentage of assets that are charged goes down. So kind of think of it that way. That's one model. Another model is just a fixed fee, meaning the advisor might have some back-end calculation based on the complexity of what's been gathered, and they say, okay, this is your set fee. There's another one that's a net worth model, where that one kind of got developed because for younger clients who don't have a lot of assets, but their income's pretty high, or maybe they own a business. That's another big driver, and you're advising on the business. That's kind of that model, and then there's kind of like an hourly fix or an hourly rate, which they're out there, but they're tougher to find as far as most financial planners.
Okay, so I think we've unpacked a handful of things that are really beneficial in the sense that if somebody is looking for a financial planner, there are some key questions that you can ask, and maybe this is as simple as, do you represent my best interests? How are you paid? And just generally to hammer into somebody's experiences, because I
Yep.
would assume that from financial planner to financial planner, all of these types of things are going to be different.
Yep.
And so
Another good question is, how many clients do you work with?
Mhm.
Because uh, typically what I've seen is a good like financial planner there's a lot of, from the work that we do, there's a lot of work that is done, in the meeting, but there's a ton of work done behind the scenes. Um, Typically, an advisor probably should max out probably in the 60 to 90 client range. Now, that kind of will vary depending on like what their staff looks like and that sort of thing. But if you get an advisor that says I'm working with 300 clients, that should raise some red flags of how much they're really going to do for you.
Sure, it would sound like in a situation like that, maybe all 300 of them, or at least a good portion of those 300, all have the same plan in place, where in reality, all of those individuals are individuals. And so maybe that doesn't make sense. And so that's a good way to start to frame it. What other sorts of questions, if you were interviewing a financial planner, what else should I know before I engage to work with somebody like you, Jared? What do I know? What do I want to know about you that we've not talked about already?
Yeah, particularly if you have a unique situation, have I experienced that situation? Now, sometimes, I mean, you may be so unique that no, but if it's always good to ask that question to see how they respond. Now, some people could be like, no, but I can figure it out. And I can figure it out because I had a similar situation that's not like yours, but I didn't have the experience, and I basically I gained the experience. I went out and did the extra education to get it, those type of things. But if you're in a very complex situation, um, you probably want someone who's done it before. That would be a good question. Um, Kind of piggybacking off of like a good CFP. A good CFP is going to be in the know of some of the industry talking heads. So then you might have to put this like in the show notes or something. But if you ask the advisor, do you know Michael Kitces? And if they have a blank stare, like I have no idea what you're talking about, maybe you should go somewhere else, because he's the leader in our industry. He writes he puts so much of his time and effort into our community, the certified financial planning community, that if you don't know him, that's a red flag.
So it sounds like somebody like me who might be shopping for a financial planner could get just enough information to be dangerous, to be able to question whether the person on the other end has those sort of ins in terms of knowing the ins and outs of what's going on in that industry. And so I think that's a good way to frame that and to wrap up the types of things that you would be looking to find out about a financial planner before you commit to working with them. And so talk to me a little bit about that. And so people can tend to have a fear of the unknown, a fear of change, and that could start to develop into complacency in a certain way. If you get involved with a financial planner and you come to the conclusion that that's just not the right fit for you, are you
Mm-hmm.
stuck there for the rest of your life?
Are you saying that particular individual or just a financial planner in general?
Is that person specifically tied to that financial planner for the rest of their life because they started there?
No,
Okay.
no. And that's one of those things where if it's like or if you find out early on that, hey, I'm not getting what I thought,
Mm-hmm.
I think it's a conversation that you have with that individual. But if you're not getting what you want, or if you're paying, Here's another thing. If you're paying more for something, but you're not seeing the value, that's another thing, because they could be giving you a ton of value, but if you're not valuing the value, then that's not a good fit.
Yeah, to maybe to paint this in a different way, it wouldn't surprise me if somebody watching has heard of their parents talking to a financial planner, and maybe there would be some internal pressures to go and talk to that person first, just because there's a family
Yeah.
relationship. Come to find out that person may or may not have motivations or goals that align with what that younger individual might be interested in, and so I just want to make sure that people know that once you have that conversation with that financial planner, you're not locked in for the rest of your life. If things aren't going quite right, you have the ability to make adjustments.
Exactly. And the thing is the financial planning community is changing, because probably what the average person probably thinks of, the kind of stereotyping of what the general public thinks of when you hear financial planner, you probably are thinking of maybe a 60-year-old white male. Like, that's probably who comes to mind. The community is growing so much that if you wanted to work with a female 40-year-old advisor, there are people that hang their hat on, hey, I'm that person, because I understand that there's a certain, it could be a woman in this case, that wants to work with a woman at this age. You're seeing more of that. So there's more diversity coming into it, and you can almost get a match, particularly with, just with the ability of like Googling. You don't have to have an advisor that works in the same town or state, or as you can ultimately kind of do some research based on, hey, does this person's values align with me? Are they the right age? Are they going through similar experiences as me? I think 20 years ago, you couldn't do that type of research. You're kind of stuck with what was close. Now, with the internet kind of and more advisors just coming on board and getting their stuff out there, I think that's a way to approach it too, if you're getting stuck in a situation that you don't like.
Yeah, to tie that all together, I think what you're going after makes a lot of sense in the sense that you can interview folks and have these discussions and find out who might align with your values, your goals, maybe even your beliefs to a certain extent, before you really dive into that sort of relationship. It sounds a little bit like dating for a financial planner, but
Exactly. Any big purchase you're about to make, and I tell everybody this, get a couple quotes, meaning go out and just see what's out there. And it's a good example. Dating is a good example there.
Yeah, I haven't dated in quite some time, so we'll pretend like I still know how that works. And
Now you can now dating is you can start out with an app. That's how it starts out now, I heard.
Oh, fantastic. So we've covered a lot of things relative to how to find and how to choose a financial planner. I think this has been really helpful, Jared. And so I appreciate you coming on the show. But before I let you go, I am curious if you have any interest in joining me for some rapid style questions known as the how-to cues.
Yep, excited for it.
Fantastic. Question number one, I want to know, what's the best book you've read in the last 12 months?
Best book. They've been audiobooks versus reading a book. Actually, I'm going to take that back. One of my clients wrote a book, and it was just based on his childhood growing up in Indiana. That I enjoyed that one.
Okay.
But from a learning type of book, and man, there's a couple that are coming to mind. One was Never Split the Difference. I forget the author's name. That one I wanted to go back and listen to again, because that was good. Yeah. And then Simon Sinek, I read that last year, Start With Why, and I'm actually re-listening to it right now, because I think that's important for anybody to, as you're going and growing, understand what your why is. So I've kind of been going back and listening to that one. And then Atomic Habits by James Clear. I read that one last year. That was really good.
And you gave me 3 books. It can tell a little bit that we're on the same wavelength. I've read those books. They're all good. I'll link to all 3 of them in the notes down below. So question number 2, what is one podcast that you're subscribed to?
Oh, I love podcasts. I'm going to have to shout out a podcast that I was recently a co-host on, and it's a local to the Indianapolis area. It's called Circle City Success. Basically, the idea behind it is interviewing successful people around the city and sharing their experiences with Indianapolis's young community or young professional community.
I was hoping that you'd plug that, because full transparency to anybody listening, that's how Jared and I met. Jared was part of that show for quite a while, and I just reached out to him because I was interested in what he was doing, and he took the time to have some conversations with me, which leads to having some conversations that you all can enjoy as well. So if there's anything to be learned from that, don't be afraid to ask. Things can happen because of it.
Yep, exactly.
All right. What is one app on your phone you could not live without?
Probably Spotify.
All right.
Combination of my favorite music being all in one spot, along with several podcasts that I listen to. So I bought the premium version a couple years ago, and because I was on the free one for so long, and best $10 I can spend.
All right. Well, that sort of ties into my next question. So you're going to have to choose something different here. What is something that you've spent $100 or less on in the last year that's brought a lot of value to your life? So not Spotify Premium.
Yep. I will say this. I got them right here. They are blue light glasses. So they block out the blue light.
Man, you should have been wearing those the whole interview. Those are stylish.
The problem is the blue light reflects back into it. So when I do a video call, I don't wear them, but I work with them on the daily. I bought them off of Amazon for $15. And the idea behind them, if no one knows, is basically if you're staring at a computer screen all day, you're staring at a equivalent of blue light hitting your eyes. Mm-hmm. And that's a cool feeling for your light. For your eyes, so you don't blink as much. And so your eyes dry out through the day. What those glasses do is they block the blueness. So then you're naturally kind of blinking more and your eyes are less strained and not as dry. So
fascinating piece of science behind it. I'll have to try them sometime myself. So I've got one final question for you. I mustache it right now. Not totally. I'm not going to touch on the mustache, even though I love the mustache, but I want to know where people can find out more about you.
I basically have Instagram, Facebook, Twitter, LinkedIn. All of those accounts are basically my full name, Jared Defore. Nothing spelled it funny or no numbers, so it's pretty close or pretty easy to remember. Jared Defore.
Fantastic. I'll link to a couple of those in the notes as well. Jared, appreciate your time today. Thanks for joining me on the How To Show.
Awesome. Thanks, Anthony.
Special thanks again to Jared for joining me on this week's episode of the show. Hopefully you found that as encouraging and as informative as I did. I know I get a lot of value out of listening to other people talk about what they're passionate about. And so hopefully that's shown through for Jared and his situation. There's a lot to be learned from folks like Jared in the financial planning space. And so if it's of value to you, get in touch with Jared or get in touch with someone like Jared so that they can help you out on your financial journey. So that's going to bring this episode of the show to a close. As always, if you're getting any value out of the show, hit the like button so that YouTube knows to show this video to somebody else that's hopefully looking for the same sort of information. And if you know anybody personally that can benefit from hearing this information or the types of things that Jared talked about, share the video with them. Let them know that you care about them, and it'll help me help the show as well. And so if you've got any future ideas for topics or things that the How To Show can cover, please leave me a comment down below. Or if you've just got any feedback for this episode of the show, you can do that as well down below. I engage and look forward to engaging with anybody who does that. If you prefer to take in content in podcast form, you can do that as well. This episode in its audio form will be available in every podcast player of your choice that I'm familiar with anyway. So search Anthony Drew Gary or The How To Show and you can check that out there. If you want to be the first to know about new episodes of the show when they are released, hit the subscribe button on YouTube or on the podcast player of your choice, and you can hit the notification bell, I believe, on either platform to be the first to know about new videos when they come out each and every Wednesday. Still doing it every week from here until eternity. Maybe. Until next time, this is Anthony Drew Gary, host of The How To Show, signing off.